Morning, Bill here with the Metals Minute. Today is Friday, June 17th, 2022. Well, we've seen another precipitous drop in the stock market, and it's going down as we speak again today, reaching lows last seen in the drop of March of 2020. So we have some things happening. The Federal Reserve Chairman just made a statement during one of his press conferences that rapid changes in the international monetary order may affect the role of the U.S. dollar going forward in international markets. So this is something that we've been talking and writing about for over a year, but now we're hearing this out of the Federal Reserve Chairman's own mouth. He's said it himself now. So this is a great time to continue to hold on to your precious metals, increase it if you can. I know times are tough, but if you're going to hold your funds in something, you know, I recommend, as I mentioned in the book, the 7% solution. It's good to have some durable goods on hand, food, durable food items and that kind of thing, non-perishables, because as the price of those things go up 24% a year, you don't want to leave all your savings in a 0.03% interest savings account. You'd be ahead to purchase some extra items. And another portion of your savings you want to store in precious metals, because as this inflationary environment continues to impact us, precious metals do a lot better job of preserving value and purchasing power over time. And we're entering into a stagflationary environment. We've been headed in this direction for a while, but the economy is beginning to implode somewhat, and recession combined with inflation equals stagflation. And traditionally, that's been a big support for precious metals prices in nominal and in real terms. So we see other things happening in the energy market that's going to impact precious metals and inflation going forward. Even though oil has come down just a little bit, prices at the pump are still much higher than they have been in any time in history. And that looks set to continue. Our oil strategic petroleum reserves are headed downwards. They keep drawing money, oil out of that to try to influence prices. And the pace we're drawing them down, we're going to be at a 40-year low in just a couple of months. And one of the things that's concerning is there's two parts to the strategic petroleum reserve. There's the sour crude and there's the light sweet crude. And we produce more light sweet crude, but you need the sour crude to mix with that in order to produce the fuels that we need. And unfortunately, what we've been drawing down the most is the sour crude that we don't produce much of. So that means that we're going to be going into winter with historically low levels of the fuel that we need in order to produce gasoline and diesel fuel and all those things that we need in our economy here. And we're going to be subject to getting it from somewhere else. So this is somewhat concerning. Everybody is talking about how rough it is now, but it's concerning what that will be in the future. So, and as we know, the price of energy puts a floor under precious metals prices because it takes a lot of energy to get these metals out of the ground, get them refined, etc. So with all the discussion of the changing role of the dollar on the international financial scene, as well as interest rates rising here, at the same time in Russia, they're announcing interest rates will be coming down. So the price of a mortgage in the United States versus Russia are almost going to be at par. They're talking about a 7% mortgage rate in Russia, and here in the United States it's over 6% now on a 30-year. And so we see inflation is worldwide, but with the comments from the Federal Reserve Chairman and what's going on with the dollar in terms of buying power, it's a good time to own precious metals. Stay tuned. We'll let you know what happens over the weekend next week. Thank you for tuning in. Have a good weekend. God bless.